NVIDIA just delivered a record-shattering earnings beat, but the market response remains strikingly hesitant. We're seeing a clear reality check as fundamental strength meets valuation exhaustion. This tension is compounded by a cooling sentiment across the broader software sector, which just logged its worst month since 2008. The disconnect between earnings and sentiment is carving out three major hotspots on today's tape. In semiconductors, NVIDIA's guidance reset is attempting to set a new floor for AI demand. Meanwhile, Circle has jumped 35% as its earnings shift the narrative from a simple interest rate play to a global payment utility. We're watching three distinct hotspots today. First, NVIDIA is setting a new floor for AI demand with its latest guidance reset. Meanwhile, Circle is shifting its story from a simple interest rate play toward a global payment utility. Finally, Mercado Libre is seeing some selling pressure, but analysts note this is an intentional sacrifice of margins to fuel long-term growth rather than a fundamental miss. NVIDIA's Q4 results were notably strong. Revenue reached $68.1 billion, a 73% increase over the previous year. But while the demand for AI hardware hasn't slowed down, Nana points out that the company is starting to hit a physical ceiling. It's not about the chips themselves, but the infrastructure needed to support them. Even with the revenue beat, NVIDIA is hitting a physical ceiling. Nana notes that power capacity under construction has actually declined, falling from 6.35 gigawatts to 5.99. The chips are ready, but power and permitting delays are creating a major bottleneck. There's also the risk of China export license uncertainty for the H200, which could cap future growth regardless of demand. Circle is proving it's more than just a play on interest rates. The stock jumped 35% after the company reported 56 cents in earnings per share, which was significantly higher than the 16 cents analysts expected. Nada points out that this beat signals a narrative shift, with the market starting to value Circle as a global payment utility rather than just a proxy for interest rate moves. Circle is evolving from a simple interest rate play into a core piece of payment infrastructure. Nana highlights the significant EPS beat of 56 cents, but the standout metric is the $12 trillion in on-chain USDC volume. That represents a 247% jump year over year. As the data suggests, stablecoins are moving directly into real-world settlement roles. This shift toward a global payment utility points to a more durable valuation model that isn't just tied to interest rate spreads. Analysts like Daniel Pronk are framing Mercado Libre's 13% drawdown as a strategic move to deepen its competitive moat. Even with revenue up 45%, margins compressed from 14 to 10% as management prioritized long-term expansion over immediate profit. For those looking at the dip, the next critical metric to watch is credit quality. For investors looking at this dip, the critical metric to watch is credit quality. Unrivaled Investing notes that while the credit portfolio expanded 90%, loans past due by 15 to 90 days have ticked up to 7.6%. If this figure starts approaching the 10% mark, it could signal a more structural risk to the company's fintech valuation. Software is currently facing a heavy AI doom narrative. The compound highlights a viral forecast of 10% unemployment by 2028 that has spooked the sector. But there is a significant reality check. Physical limits on compute and power make that rapid timeline unlikely. Beyond the sentiment, there's also credit stress. UBS has warned that software-heavy private credit loans could see default rates as high as 15%, creating a difficult double hit for software equities. Along with those technical levels, keep a close eye on what is being called the double whammy for the software sector. Nana highlights a UBS warning of potential 15% default rates in software-heavy private credit. Watch for any further reports of suspended redemptions. That would be a broad signal of risk-off sentiment that could overshadow even the strongest earnings beats. For this NVIDIA-led rally to hold, the S&P 500 needs to break 7,000. Support at 6,900 is now the critical floor. Our top watchlist pick is Circle for its narrative momentum, followed by Mercado Libre, where we're watching for credit stability before buying the dip. Finally, keep an eye on private credit redemptions. Further suspensions there would be a broad warning for software and risk assets. NVIDIA and Circle prove that AI and fintech fundamentals are still winning, but the overall environment remains heavy. Between narrative shifts and credit risks, there's significant friction to navigate as we move into next week. Check the description for our full source list and subscribe for your daily Signal Digest.